Now, add this hung parliament election to the already contentious Brexit and give us a sense of what mainland Europe is thinking and will likely react from economic and markets point of view.
Well, you know, people on the markets are talking about more volatility to expect in the weeks to come. And when market people talk volatility, it means that they themselves also find it very, very difficult to predict what's going to happen. Brexit, of course, is a first. Never before we had such a divorce process in the European Union. And of course, now with this new situation in London, it's not easier to predict how the Brexit negotiations will go. What I can tell you is that economists who work for large investors, banks and pension funds, who write reports for them in unison here on the European continent, say that a hard Brexit is off the table. You know, a Brexit where the UK government, with a nationalist tone, decides what the outcome of these negotiations will be. The new government will have to, you know, take into consideration coalition interests, for example, interests in Northern Ireland. And people in Northern Ireland are likely to want to have an open border with the Republic of Ireland. So that's a positive hint for the customs union. And, you know, not having a hard Brexit means also that it's more likely that the European Union will have its interests recognized, which of course have to do with open borders, with a free movement of goods and also of people.
Right. And of course, it's a very interesting weekend today, Conrad, from UK election to Comey testimony to ECB decisions. Do you see any of this baggage being carried into next week, or we should expect a blue ocean scenario?
It's never too late to dream of blue oceans, Jimmy, but let me tell you that most market people will continue to carry some burden on their backs when they go into this weekend and when they go into next week, because so many events are looming which have the potential to influence the market. This weekend in France we'll have the first round of the parliamentary election. Of course, the question here is whether the new party of the new president, Emmanuel Macron, will get a majority here. Later next week, it's a Federal Reserve event on Wednesday, you know, an interest rate decision in Washington, and Janet Yellen will give her take and the take of the Fed on the economy. And at the end of the week, it's Triple Witching Day. Options and futures will be expiring, and that's often a day that comes along with lots of, you know, strange and sometimes difficult to explain ups and downs on the market. So lots to get prepared for.
Sure. We all hope for a better week ahead. Thank you very much, Conrad, and enjoy the weekend. We move on now to Asia, where the markets are mostly shrugged off the political uncertainty in the UK. Japan's Nikkei 225 rose 0.52%, and the Kospi gained 0.77%. Australia's benchmark ASX 200 index was marginally higher, closing 0.02%. The Hang Seng Index reversed earlier gains to edge lower by 0.35%, while markets in mainland China closed in the money. The Shanghai Composite closed up by 0.25%, and the Shenzhen Composite added 0.233%. In China, the Consumer Price Index for May rose 1.5% on year, but dipped 0.1% on month. Meanwhile, the Producer Price Index reflected a 5.5% rise on year. Away from the markets, Kenyan government says it will convert its $243 million in loans to Kenya Airways into equity as part of a broader restructuring to nurse the ailing airline back to financial health. The government owns a 29.8% stake, while Air France-KLM has a 26.73% stake in the airline, which slumped into the red 5 years ago, following a downturn in tourism after a spate of attacks by Islamist militants. The airline has failed to record a pre-tax profit since then, and the losses have compounded the huge debts the airline took on to buy a fleet of new Boeing planes pushing it into negative equity territory. The figure of $243 million was contained in a government paper submitted to Parliament on Wednesday, seeking approval for the overall deal. Airways warned in a statement on Thursday there was a risk of significant dilution of existing shareholders as it offers new equity in the restructuring exercise. And in Uganda, the government says it hopes to close a loan deal of up to €325 million this month with a UK government credit agency and Standard Chartered Bank for an international airport to service its oil industry. Crude oil reserves were discovered in the East African country's Albertine Rift Basin near the border with the Democratic Republic of Congo more than 10 years ago. A series of setbacks, however, including a lack of infrastructure and wrangling over taxes and development strategy for the fields, have repeatedly delayed the start of production. Tony Kavuma, Chief Mechanical Engineer at the Ministry of Works and Transport, says Uganda had already held preliminary talks with UK Export Finance, the UK government's export credit agency, and Standard Chartered Bank for a loan of €310 to €325 million. He says the Ministry of Finance and the two financing organizations were negotiating the final terms of the loan agreement, and signing is expected by the end of June. And France's Total SA is looking to invest in gas and power infrastructure projects in Morocco and South Africa as it seeks to open new markets. Total will roughly double its liquefied natural gas portfolio by 2020 to 15 million tons per year, but the company needs to look at deals that will give it foothold in new markets and capture new gas buyers. Morocco plans to build a project worth up to $4.6 billion, which includes the import of up to 7 billion cubic meters of gas by 2025, the construction of a jetty, terminal, pipelines and gas-fired power plant with capacity to produce up to 2,400 megawatts of electricity. Now, in January, Moroccan state-owned power utility ONE picked HSBC as financial advisor for the project. We'll take a quick break. We'll be back in a moment. Do stay with us.